Just going to start off. Welcome to Money Spaces with Kalu. This week we're going to talk about energy, right? Crude oil prices, how Nigeria can take advantage. Our title is essentially, with the higher crude oil prices, is that going to be an opportunity or is that going to be a threat, right, to Nigeria? And that's essentially what we are saying. So I have two guests. I have Dolapo. I've known Dolapo for a long time, or at least I've watched him for a long time, and he is an energy analyst. So he's going to take us through, should we say, the energy side of the whole equation. What's happening globally with energy, with crude oil prices? What's happening with Russia, with Ukraine? How can Nigeria take advantage of that situation? Then, of course, we've got Ahmed here that's going to take us through the numbers, right? What does that mean for us here as Nigerians? Yeah. So I'm going to ask Dolapo to come off mute, just introduce himself, and then literally we can start. Dolapo, hi, how you doing? So Dolapo, you're going to come up. I see you here. So if you come off mute, I just invited you to speak, and then we can just take it from there. Ahmed, I see you here. Thank you so much again for answering our request to come in and talk to us as well about investing. So Ahmed, you can also just come off mute and just say hello.
Hi, Kalu. How are you doing? It's always a pleasure being with you. And good evening, everybody.
Thank you so much, Ahmed. Welcome. So I've got Obiano Ju here. She's basically just going to assist us as we say, compare and just doing the back end stuff, reading the messages, making sure that we're not missing questions that people may ask. So Obiano Ju is right there as a co-host. So if you have any questions, you can send to my DM, also send to her DM, so that she can grab it. So if we're talking, we don't miss it, because I can't ask people to speak. I will try to, but I normally have difficulties doing that. So Obiano Ju, you can come off mute and just say hello to everyone. All right, so I think Obiano Ju is there. She's a co-host now, and I still see Dolapo. I can't get Dolapo to come off to speak. Dolapo, I've invited you again to speak. I guess you should just maybe refresh, and then you can basically come in. Yeah. So you got to ask, Dolapo, you got to ask, just unmute, just request to speak, and I'll just give you that chance to speak, and that's going to be it. Add speaker, and I've added Dolapo. Send speaker invite. You should be fine now, Dolapo. Great. Ahmed, whilst we're struggling with to just get Dolapo in here, could I ask you just a question, like just for on my own side? I woke up. I think I woke up at night and I saw that Russia had invaded Ukraine, and immediately the market started to crash. When I went to sleep, the markets were down 500 points. That's the U.S. market. The S&P was down 500 points. The next morning, the next day, they were down almost 1,000 points, almost 1,000 points. That's a correction right there in 24 hours. And of course, the mind was that oil prices are going to be affected. And if oil prices are affected, and the U.S. is already running a 7.5% inflation, and that inflation is driven mostly by higher energy prices. The thinking, of course, was that the energy price will basically shoot off the U.S. growth, and that would push it into a recession. The sanctions came out the same day, and they were just very, very watery. So the market just basically recovered back the 1,000 points. Literally, it went back 1,000 points in less than 2 hours. I mean, what's the storyline here for us, and what should we take from this? How should I, as an investor, read this? How should it prepare me for further market swings in this very, very volatile period that we find ourselves?
Okay, thank you very much, Kyle. Just to add, I'm sure you are very aware that so Russia invaded Ukraine on Thursday, if my information is correct, and the American market was positive on Thursday and Friday. So almost taking back almost all the some significant impact on the whole Russia invading Ukraine, you know. And for me, my takeout from that is I think a lot of investors were expecting the negative. And when the negative ended up not coming to reality, they had to change their perception about the future. So I'm very sure a lot of people expected America to come out gun blazing, you know, saying, "Oh, we're going to, you know, we're going to Ukraine, we're going to fight Russia." You know, then you see the whole Afghanistan happening over there again. I saw a lot of American investors, a lot of American traders, and everybody expected that reaction. You know, the fact that Joe Biden had several times mentioned that, you know, if Russia crosses the line, we're going to fight back. But when Russia eventually crossed the line, like you mentioned, even the sanctions were watching. So it's all behind, you know, and a lot of European countries, and I'm very sure America also mentioned that, you know, we're not sending troops, we're just sending guys ammunition and all that to fight your battle. So what that just presents itself is that the negative impact that everybody probably presumed was going to happen eventually didn't happen. You know, so the whole American fighting Russia was in Ukraine was probably going to happen. So now it's just a Ukraine-Russia thing.
Yeah.
You know, so I would say a lot of investors overreacted.
Yeah.
We still left us to monitor, at least at this point of this having this session, yeah. It seems like the way the market reacted positively on Thursday and Friday just evidences that it seems like, oh, I think we overreacted.
Yeah.
Things are not as bad as we thought it was going to be. So okay, let's start having positive thoughts, you know, and that's probably as already reflected in price, which is what we will see as, you know, the turnaround. Because I was to be honest, I think we had the limit of Twitter exchanges, and in my mind I was like, this is going like down, way down. Like on Thursday, it was like, to me, it was like, this is going down. Like, you know, this is like S&P going on a nice nosedive. But, you know, we've seen it come back around to the positive. So it means that I think the market has reassessed and, you know, told itself that investors have assessed and told themselves that, you know, I think we overreacted. It's not that bad as we expected it to be.
I think so. I mean,
that's my feedback.
I think you're spot on. I think it was I don't think it was an overreaction. I think the market was correct, if I may say that. But the sanctions were very, very weak. We had heard Joe Biden say serious sanctions, and sanctions came out literally as Joe Biden was speaking. The Russian market was going up because he didn't sanction their oil, he didn't sanction Putin, he didn't take them off SWIFT. So the people were like, okay, so what are the sanctions? He was sanctioning a World Cup, all that kind of. So I think the markets got it right and ahead, but the politicians did not follow through with their promises. But let's see let's see. It's early days. I've got the Dolapo back in here now. So I want to basically just come to the Dolapo and say, just as an overview, Nigeria is the largest exporter of crude oil in Africa. Crude oil prices is about 100. I know our benchmark was below 50, if I'm correct. Nigeria has 50. Great. Nigeria has squandered the Gulf War proceeds, was squandered the oil boom. I know squandered is the right word, but we haven't maximized that opportunity. Will it be different this time, Dolapo? Can you just walk us through what's going on globally and if this will be different this time?
Okay. First of all, thank you for having me on your space. I always appreciate these opportunities to talk about oil and gas. And when it comes to the issue of Nigeria, it tends to sound a little bit critical, but let's be objective and see what's really happening. From a global perspective, we've actually reached $100 oil price within the last week, and a lot of that was being pushed by the ongoing issue between Russia and Ukraine. But we didn't get to 100 purely on the basis of that. We got to that point where we could actually see $100 oil because of several other factors that were already in play. If you understand oil and gas, one of the things you need to understand is that oil prices tend to operate in cycles of 3 to 5, sometimes 7 to 10 years. And during those cycles, you have periods of really high prices and other times you have periods of really low prices, and then that cycle repeats itself over and over. So, for instance, if you look back as far back as say just 1 minute, I have a couple of slides I would love to share at some point. Maybe I'll share them on my Twitter handle, and then we can tweet them into the group or into the space.
Yeah, if you share the space, or then you can grab it.
To say 2008, we had $100 oil. We look back into 2011, 2012, 13, we had $100 oil, and then we are very close to having another $100 oil at this time again. So those cycles, they come and go, and countries, they try to align activities in their industry, in the oil and gas industry, to maximize those cycles when they happen. So, for instance, when oil prices are really high, it's a good opportunity for you to, get a lot of surplus in, because take for instance Nigeria right now, our budget is the budget is actually set on $57 oil, and production is estimated at 1.8. We will get some surplus, but not as much as we think we will, and that's because our production at the moment is still under 1.4. As of December 2021, production numbers show that Nigeria was producing 1.3 million barrels per day.
What was the target? 1.3 is actual. What was the target?
1.8.
Whoa. Okay.
So we were like, that was a major gap. And a lot of that is because we're starting to see a situation where a lot of our fields have grown old. Oil majors have not invested, or they are not investing new money. If anything, they've actually even shown that they are more interested in selling most of their onshore and shallow water assets and leaving the country. So if you follow the news, you notice that Mobil concluded a deal selling pretty much all their shallow water and some of their onshore fields to Seplat just yesterday. I know Chevron's in the market. Shell is in the market. They're all trying to sell their onshore and shallow water fields and pretty much only focus on deep water and offshore Nigeria, and not really invest any new money. So back to what I was saying, we might book some surplus because of the price, but we won't get a lot of surplus because of the low level of production we have. Now, I was talking about the cycles, and what I was trying to make there is that, so you try to align. You try to max out your production when oil prices are high, and when oil prices are low, you try to align your other activities. That's when you now start to drill a lot of wells, because when oil prices are low, there's low demand for oil, definitely, and there's also low demand for oil and oil field services, and then prices for those sort of things tend to come down, and that's the best time to sign up rigs, to sign up drill ships, and try to drill as many wells. You won't complete them, but you will drill them down. And Saudi Arabia gave us a very good example of this. When oil prices were in their 30s and in their 40s, Saudi Arabia went really crazy, drilled a lot of wells. They didn't complete those wells, they just drilled them and capped them, drill and cap. Now that oil prices are high, guess who is the only person who can actually add more production into the market? It's Saudi Arabia. Even the shale guys are not able to access as much credit as they could in the US. Canada here, we have a lot of oil in the ground, a lot of oil sands, but we can't produce more because of pipeline capacity. We don't have enough pipelines to actually ship the oil out, and we don't even have access to any of the oceans because we don't have ports either on the east or the west coast of Canada. All our oil has to pass through America. As a result, it depends on how much pipeline capacity there is, and if America says we don't want, then there's nothing we can do. So it's all the people that have excess capacity to actually push some products to the market and help prices reduce can't do it. So as a result, we are in a situation where the geopolitics, as yes, the Russia-Ukraine war has pushed oil prices to 100, but it will likely stay high until the supply shortage is addressed, and that is the situation where we are in the market.
So Donald, if I could summarize what you're saying, essentially Nigeria will get some surplus based on the price differential from now, but because we're not meeting that we have a $500,000 barrel gap from our own projections to what we are actually doing. So we might not actually hit that full mark. Yeah.
Exactly.
And the point you're making is that the oil prices were already high. Before we had this inflation, right? So it was more or less, so it's already going to be high. And if I may add, the US is going green. So the US is essentially saying, hey, we're not going to start invest in crude oil, fossil fuel sector. We're going to look at more green renewables. So that is also taking off supply from the market. So on a long-term elevated basis, Nigeria and the world is going to basically be open to, should we say, higher energy prices, but we're not taking advantage because we've got a lower production, more or less.
I mean, and there are many ways we could take advantage of it. I mean, if we had really had our acts together, think about the marginal field round that happened last year. One of the reasons why a lot of the oil majors are moving out of Nigeria, a lot of investment is not happening in Nigeria, is because if you look at the dynamics of the oil and gas industry globally, a lot of attention is shifting to oil projects that have short lead time. And so what that is that from discovery to production is a shorter time period, say about 2 to 3 years.
Yeah.
You can do it with shale, because with shale you can do like in fact 6 months. The oil and gas majors have developed expertise to the point where even offshore production, they can get to production from discovery within 3 to 4 years. And that is why and a lot of that is driven by not just the below ground issues, but the above ground issues. If government policies are conducive, if relations with communities or the natural setting of the location where the discovery is made is also conducive to operations, it's easy to quickly move to production. So a good example would be what's happening in Guyana. If you look at or just offshore Guyana, where Mobil has made some significant discoveries, and they've started pumping a lot of their money into that location, and they're like, you know what, I'm cutting off all my losses in all these other African countries, and I'm just going to focus on that side of the world. And they're also looking at some shale production as well too. So a lot of the oil majors are in shale in America, but they're not approaching it with the wildness we saw in 2010, 2011. No, they are approaching it with their normal oil and gas major methodic way of approaching oil production. So we're seeing some shale coming up, but not as much. Also driven by the fact that Biden is not really in support of a lot of oil and gas production. So he's not really giving them the licenses as much as they want. So that's also capping their production output in America. But Guyana, where the government is really in support, where they are getting all the backing they need, they are pumping their capital there, and they're moving away from countries like Nigeria. So that's what I was saying. Really, my point is that we can take advantage of it if we took things like the marginal field rounds serious. That's something that has a short lead time. A lot of those fields are ready to produce. At the end of the day, if you really so I worked with like 3 or 4 of those guys when they were bidding for those fields, and a lot of those fields were fields that you can slap an EPF, an early production facility, on top of it and start producing within 9 to 12 months. But look at the round. At the end of the day, about 33 of the fields had to return to DPR or PURC because they couldn't pay for the signature bonuses. They were awarded to people that didn't have the cash. Whereas there were many companies I'm aware of that bidded for those fields, had the capital ready, but they were not picked because a lot of the political sentiments that went into the selection of the final winners affected that. So what am I saying? We need to take these kind of things very serious. When oil prices are high like this, we need to find ways to max production, introduce policies to push companies to produce more. That's what we need to do.
So I mean, the summary is that low prices you invest, high prices you reap. Nigeria did not invest back then, so we really can't reap now, which is why we have this deficit in output.
If you look at our oil production since 1990, Nigeria has literally been on the same level of production and then dropping in the last 3, 4, 5 years. And we've been producing that thing 2.2, 2.3 million barrels per day up into the 90s, into the early 2000s. And then in the late 2010 downwards, we started seeing 1.8, 1.9, and then it started dropping to 1.7. And then last year, I mean, we had the OPEC quota, which reduced, and we were forced to produce 1.4. But even when OPEC said you can start ramping up production, we couldn't ramp up production because there was no more investment. A lot of our fields. So I did a study some years back. Nigeria's 30 largest fields, if you take our 30 largest fields and you track their production output over like a 10-year period, their production has reduced by more than 30%.
Wow.
So part of what has helped us to sustain production has been some of these smaller fields that have been coming up that are producing 20,000, 10,000, 15,000 and so on. We're no longer seeing many of those fields like we had in the past that were producing 100,000 or 200,000, 80,000, we're not seeing those big fields anymore because the investment that's required to get that kind of production, the amount of money that you would have to invest to get that, we're not seeing that sort of investment happening anymore. Because it was the oil majors that were doing it and they're not doing it anymore. So a lot of that has been due to the fact that the delay in passing the Petroleum Information Act, the Petroleum Bill, the sort of back and forth they've had with the government, they are still in court as we speak today over supply issues. So all those sort of things have really created a situation where the environment is not as conducive for the investment as they should be. So, I mean, think about it. We have about 36 billion barrels, but we're producing only 2 million barrels or 1.4 as 1.3 as at December, for a country that could potentially be doing about 4 million barrels.
Wow, there's a lot. Those figures are scary, Dolapo. But let me just, because I have you here for a very short time. This PIB delay, what's going to happen? How does it impact all these we're talking about? The delay in the PIB now, I think for 12 or 18 months or so.
Yeah, so I mean, some parts of it have been passed recently. Some parts of it have been passed. But the delay was because, I mean, don't forget, in 2007, when Obasanjo put together that committee to sort of look at how to reform the entire oil industry, and they started working since 2007, and then we finally saw some parts of it pass in the first year, in Buhari's first tenure, he passed one part of it, which dealt with all the governance. That was the PIGB, and then we saw PIA also passed, I think, last year. I haven't read that particular PIA bill, but part of what we are seeing is that there's been a restructuring of the regulation of the industry, PURC, which has been formed from the erstwhile DPR, and so many other things have been reorganized within the industry. But the key thing that those sort of bills need to do or need to address was the long contracting time for projects in Nigeria. Prior to before those bills were passed, the average time it takes to move a contract from, we have discovered oil and we now need to get all the license and all the permits we need so that we can actually marshal all the manpower and materials we need to get that oil to pass, it takes anywhere between 18 months to 3 years. So that file will just keep creeping slowly through government, and the project that in another country would have been passed in 6 months will take like 3 years to get to permit. And then by the time it finally gets to permit, the person interested, they've even allocated some of the capital elsewhere also too. So it's not like capital is static. It goes wherever it is needed. So if it's not available, if the permits are not there, they allocate the capital elsewhere. And if you check all the capital budgets for the oil and gas majors for last year, very few of them allocated anything significant to Africa. Maybe some of the companies like Total, because they have projects in Tanzania, Mozambique, they have projects in South Africa, they have some projects just offshore Congo as well, but not so much of the majors allocated any significant capital to Africa, and that's because they are seeing that the lead times generally are higher here, the costs are getting higher, but other parts of the world are welcoming them with favorable terms, favorable taxes. So we need to address, those are the kind of issues that the bill was meant to address, and that delay created a lot of uncertainty, knowing whether government was willing for them or just trying to see how they can get more revenue from the industry. So we are where we are because of that.
Wow. So if I could summarize what you said, Dolapo, you're basically saying it could be an opportunity, but because we have not invested in the past, it's going to be a past opportunity.
Exactly. Because oil prices at 100, that's fantastic for us. Imagine if we were producing like 2 million barrels and we had the kind of budget we have at $57 benchmark, we would have a significant delta between the budget benchmark and the actual price in the market. And don't forget, our crude Brents always sell at a premium to Brent. So even though we're talking 97, 98 in the actual market right now, our Brent, our Focados, our Bonnie Lights, they are selling at 102, 103. They are selling at higher prices. And a lot of our crude is also contracted, so it's not like we're looking for who to buy them. They will sell as soon as they hit the market. So it would have been a fantastic opportunity also to think about maybe we should pay off some of our debts. Don't forget, we're in a situation right now where China is actually starting to have some cold feet when it comes to releasing more money to Nigeria because we borrowed so much already and we're not necessarily giving them the kind of access to oil like they want from us. So there's some cold feet. It will be an opportunity for us to pay down some of our debt and say, you know what, we have this surplus now. Let's pay down our debt, reduce our debt. Because if you think about it, the interest on those loans, the servicing cost alone, some people were doing some calculations recently. We're spending a significant amount of our government revenue on debt service.
It's about 72% now. Last year was 98%.
Exactly. So this surplus would have been an opportunity to pay some of that. Another thing that we could have benefited from this time is if we had also developed our gas sector. Don't forget, gas prices are also indexed to oil. So even when you sell gas as LNG or as pipe gas, the contracts that underline those sort of sales tend to be indexed to oil as well. So as oil prices rise, those gas prices also rise with it. And we see the situation that Europe is in right now. At the moment, Europe buys about 52% of our gas. And even with that, they still are not getting enough gas, which is why America cannot sanction Russia's oil and gas. They can't touch it. If they do, they are going to affect their allies in Europe, Germany, Italy, France, who all depend on the oil and gas from Russia. So they can't touch that, because if they do that, then they are threatening the sovereignty and the energy security of their allies. They can't do that. So that would have been an opportunity for us also to grow our market share in Europe, because if Russia is using its gas as a political tool to influence them, then we would be the natural option. We would have an option to supply more gas. We've been talking about LNG train, this 8 right now for a very long time, and till date, despite the fact that that is actually like the best functioning government joint venture in Nigeria, we haven't done it. There's an opportunity to also build pipe gas, and I know that's probably a lot trickier. I've been a fan of this for a very long time, that we need to build a gas pipeline to Algeria or Morocco and then supply Europe. Reason being that in times of war like this, it will be easier, because in times like this, even like at the moment in Ukraine, in the Black Sea, oil shipment is being affected, because if you try to move oil shipments, the Russian ships have created a naval embargo on ships moving in the Black Sea. So in times like this, moving things by pipe is typically the easiest way or the safest way. And if we had pipe gas to Europe, that would be really hot cake right now. That would be an opportunity for a very good revenue spinner as well. But we can't do that as well.
Gotcha. So, Jalakwa, in closing, before you go, you've touched quickly about the oil and gas, but the gas side, LNG, is that an opportunity? Apart from the pipelines and all that, is that an opportunity that we can reap more from? I mean, just in
Absolutely. Because gas prices right now are really big, and part of what is even pushing gas prices now is that China has started to switch its energy mix. So China in the past has always been a major coal consumer, but in the last 3-4 years, China has actually taken the climate issue serious, a lot more serious than even the West, and that is part of what has driven energy prices in Asia really high. Energy demand in China was really huge. If you think about in December, China was actually reporting shutdowns. They were having power issues because they couldn't get adequate supply of what they needed. And Russia was a big part of the supply they were having. And part of why Russia is able to deal with Europe the way it is with gas is because now that it has a major buyer in China also, it can switch some of its gas from Europe to China as well. So there are all sorts of dynamics that makes gas a really attractive market for us. And I think now with oil prices at this point would be a very good time to attract the funding for it, because we have more cash, we have a higher oil price, and we can actually support it with our crude oil production instead.
So I mean, that's the way forward now. Go face gas, get local Nigeria pumping with gas, take it to West Africa, then possibly take it to Europe, and then reap those benefits and start to downstill oil that is going to be, should we say, renewable, challenged in the coming years.
In the future, exactly.
Yeah.
West Africa not so much. I'm not so big about gas to the rest of West Africa, because honestly, a lot of our African countries are still struggling. And if you think about it, Ghana still has a lot of debt to Nigeria when it comes to gas. So not so much West Africa, but Europe, Asia, especially for me, Asia, that's where the big market is. And right now, they're only about 40% of our gas gas imports. They import only about 40%. They are like they constitute about 40% of our gas exports. So they are a big deal for us. There's an opportunity there. There's also an opportunity to, use this time to attract, investments into refineries for us as well. Exactly. And that's something we must always touch on because of what's going on in Nigeria currently. Some people imported very bad fuel into the country. At some point, I think we're going to have to choose if who you want to serve. If you want to serve Dangote or you want to continue to serve NNPC's GSDP partners, with all the issues. But ultimately, we have to invest in the refinery space because our energy security is being threatened. We should take a lesson from what's happening in Europe. Russia is able to manipulate Europe because he's their main supplier of gas. Yeah. If anybody were to cut off Nigeria's fuel supply, we tend not to have more than 30 days of supply.
1 month, that's it. I don't think we have enough even 1 month. I don't think we have enough.
And they shut down your country once they can cut off, because once they can cut off supply to the ports in Lagos, that's it. So energy security is important. And in worst case scenarios, you can see what's happening. Somebody brings in really bad fuel, then it affects a lot of, it's a major cost. I think I read some NNPC was spending some 17 billion also to clean the fuel that had been brought because it was mixed with methanol instead of ethanol. So it could easily be a small thing like a typo on a shipping invoice.
Yeah. I mean, ethanol, we've got ethanol in the gas over here in the States, but we don't have methanol. Is something different for Europe, I guess.
Exactly. So they mix it in with methanol for us, and we don't do a lot of methanol in Nigeria for gas. We use just only like 5% ethanol or so in our fuel.
Interesting. All right, Dolapo, thank you so much. I mean, you've been 30 minutes of giving us an overview of the world, the opportunity that we could have grabbed our hands around. We've talked about gas, and I think we have a sense of where we are right now. I think it's a sense of we may have already missed the opportunity. That's the summary, that we may have already missed it, but there's still time. Oil prices are not going to go down to $70 anytime soon. So we might still have gas, and we might still have time to catch up. As we say in Nigeria, God willing, right? Okay. God willing. Thank you so much, Dolapo. Thanks for chiming in, and we do appreciate your time, sir. And do send us anything you have, my DM or Benuju's DM, and I will also post.
I have a couple of slides.
Okay.
I will send it to your DM.
Exactly. Thank you so much, sir. Yeah. Okay, Ahmed, thank you so much for hanging out. I just wanted Dolapo to just give us that overview, right? To paint that picture for us from the energy side. And that's what basically he has done. So now let's talk about the economics and the finance and more or less the personal finance of it. And if you may, Ahmed, I want to take us from the economy top down. Let's go top down using what Emmanuel has essentially said. I have a request there to speak from Emmanuel. Ahmed, are you back on? I see you as a speaker. Great. Great. So, I mean, we had Dolapo, and what he's basically saying is that this may be a missed opportunity, right? So, just top down, the budget was passed, and that budget had no subsidy in it. Then, suddenly, the subsidy is put back in the budget. That's about 2.5, right? So, what does that, first of all, tell us, first of all?
So what that tells us is that there's our budget deficit is larger. Yeah, because obviously we all know the issue revenue versus expenditures.
Correct.
And our expenditures is significantly larger than our revenue.
Yeah.
And adding the subsidy is also like increasing your expenditure. So if we think about it, just think about it in simple human terms. What you spend on a monthly basis is higher than what you earn as your salary, as your monthly salary. So the question now is that excess expenditure, where is it coming from? So basically it has to come from that two ways. Either you increase your revenue, you get external funding. And that external funding means that either you call your parents or you call, obviously, I can't say you call your wife, but you call your wife, you call your parents, call your friends and say, guys, please, I need money, I need to cater for this thing. And that's what Nigeria is technically going through right now. So adding that fuel subsidy back into the picture means the deficit, meaning that differential gets larger. And we all know that, economics 101 tells us that we get that majority of that the majority of the funding will come through raising debt. So that's why a lot of people are always watchful of that deficit. So, that means the government needs to raise X trillion. I think that the last time I checked it was about 16 trillion.
Yeah.
As a deficit. So adding that, adding the fuel subsidy to it takes to about 19 trillion. So that means that money needs to be borrowed.
It needs to be borrowed. And this before the 2.5 trillion was added. We were already operating a deficit budget, which means we're going to let's just put some to understand. Every nation borrows. There is nothing wrong with borrowing money. And even if you borrow to pay salaries, there is nothing wrong with that, because salaries are fixed in time, but revenues are not fixed in time. So you can borrow to meet your bridge, to bridge an income, fine. But when I did an analysis of the Nigerian fiscal budget, the income and expenditure, Nigeria is literally borrowing money to pay down retiring debt. So we're refinancing. That's one. Then the bulk of the euro bonds, because the problem is in the euro bonds, we're paying about 8%, 6% in euro bonds. The bulk of the euro bonds is going to what is tagged budget support. It's right there in the DMO template. So 44%, I believe, goes to budget support, which I believe is quote unquote salaries. Then the bulk of it is like in two elements. One goes to rail, and I think another one goes to infrastructure or so. But 44% of the monies we're borrowing from the Eurobond is going towards budget support in quotes. So that already tells you that all this borrowing isn't going to what the LACBO is talking about, investing in drilling wells so that we could have pumped. It's not going there. Forget salaries. It's just not. We're borrowing to just stay afloat. 2000, it was 92% revenue to debt. Now it's about 72% revenue to debt. So on a top line basis, we're a debtor nation. That's basically what we are, entering into a debt trap. I'm just quoting the figures. I'm just saying, because how do we pay back those revenues from crude oil prices? Now, crude oil has gone up in price, but the LACBO is saying we have a deficit of 500,000 barrels because we have not invested when crude oil prices were lower. He made the point that the marginal fields were auctioned and we just gave it to normal people, and that those people did not take into account what we should have done. That's what he's saying. Agreed.
So the question is, where is the revenue going to come from?
Taxes. They want to tax Nigeria. So VAT has gone up. We see the tax on Google and Twitter that they want to implement, and lots of other cost of doing business are going to go up as well. So taxes is one way they can. We have a tax now on sugar. So if you drink Coca-Cola and the rest, you're going to pay an extra sales tax on that tax on sugar. So taxes are going to go up. We know that. So
and I just mentioned, they're also going to start taxing your investment.
Please explain.
Okay, so to start with, when you invest in the equity market, you will obviously be taxed on dividend. There's a dividend like an income tax, which is a withholding tax on a dividend.
Correct.
But the capital gains tax, which is the tax as a result of changes in the value of your investment, over the point you bought it and the point you sold it. If you make a profit, you pay tax on it. So that wasn't in existence. That is pretty much while I've been in the market. That has not been paid.
And also,
now they're bringing that back into the picture. Yeah. So starting from this year, but there's a bit of a clause around, which is if your value of your investments that go 100 million. So if you are a big PFA or a big asset management firm, when you do transactions that works above 100 million, then obviously you should be prepared to pay that tax.
And also, and also, if you buy federal government bonds and federal government treasury bills in the past, you don't. Yeah. Yeah, you don't pay the taxes. But now, if you buy only federal government bonds now are tax exempt. So that means if I invest in a treasury bill or a state bond or even a private sector bond, I don't get any tax exemptions on that. So that's another way they want to raise money.
Exactly. So the only tax exempt right now is federal government bond. So that means if you are tax sensitive, because we have some investors that are pretty much tax sensitive. If you are tax sensitive, then that means you'll be piling up a lot of federal government.
And also, you know the biggest place they're going to fund their budget from that we're not talking about, but we should, the Central Bank of Nigeria. The Central Bank of Nigeria has opened up an unlimited ways and means to the federal government of Nigeria. So the federal government of Nigeria is selling, quote unquote, or is getting financing from the Central Bank of Nigeria to the tune of trillions. This is irrespective of what the CBN is doing in terms of funding essential sectors with low-cost loans. That is totally separate. This is the Central Bank of Nigeria, their ways and means supporting the budget of the federal government of Nigeria to the tune of trillions. And that, I think, is the major source of funding right now for the Central Bank of Nigeria, not even the taxes and all that.
Yes. I will speak a lot about the central bank for reasons personal to me.
No, don't.
I would agree with you that that's very, very significant.
It's not illegal. I mean, it's not illegal. Ways and means.
It's not illegal. But at least we need to really consider that because consider it your own sense. Consider in the sense that at times some things might be misused.
Okay.
Is it the proper way? Trial is illegal, but if you think treats very well, you find out that you start to ask some certain questions around could this be, what's that word? Could this be misused?
Correct.
Like I said, I'll try as much as possible.
Okay, I hear you. So, I hear you, Ahmed. Good point. I hear you. So let's get to the brass tacks. If I was a Nigerian guy and I was going to invest in the 2020 and I had the US market, the Nigerian market, I had bonds, I had equities, what is on my mind? I am thinking of number one, inflation. I'm thinking number two, federal government is going to borrow money. What should I do? How should I approach this market and how should I invest my money to take advantage of what I'm seeing in the economy, really? How does this war in Ukraine affect and all that?
Okay, let's start with the war in Ukraine. I'll take us a bit back. And that's why, I attended the session early this year and I said, it seems like there's always a curveball every year. There's something that just happens in the first quarter of every year that just spins your dial, changes everything. So at the beginning of the year, it was all about inflation, global inflation. Inflation is rising, energy prices is rising. It seems like energy prices don't go down. America started making noise around it. They started projecting that, it seems like our inflation rate is going to be at 7%. It ended up being at 7.5. The UK, ended up being at 5%. Everybody just, all around the Europe is about inflation. So every outlook for 2022, both local and foreign, it was all about inflation. And it was pretty much easy at that point in time. Obviously, when inflation rises, you expect interest rates to rise. So the beautiful the expectation for you as an investor is why don't you hold on your cash and sort of maybe move away from risky assets, Bitcoin and the like, and hold your cash when inflation goes up. You put your money in interest rates bearing securities, which sort of preserves your capital. Then February kicks in. Ukraine, Ukraine, and people started thinking about different things. And crude oil obviously went higher towards the end of this month, and you start to ask questions that nobody's talking about global inflation again. Everybody's talking about Russia invading, the war in Ukraine, Russia invading Ukraine. How does that change the dynamic? How long is this going to play out for? Like we said earlier, what are the sanctions that we expect America? What's going to play out? Is America, is Ukraine going to turn to the next Afghanistan? Is America going to, Biden going to send troops? So the dynamics are changing. People are thinking about things. So for me, I think what Russia and Ukraine did really didn't change. What I think it just aggravated that risk-off element, which is people just want to get out from risky assets, and that's why you've seen Bitcoin. I know a lot of people on this team space obviously are cryptocurrency traders. So Bitcoin is falling, Ethereum is falling, everything is falling. American markets was falling, then obviously we saw the change. Like I said, change in expectation, like I mentioned earlier. So what to kick in then at that point is risk off. So for me, when I think about risk off, it takes me back to COVID-19, 2020 March, 2020 April, 2020 May. And there was an opportunity that presented itself that, to me, let me don't lie to you, if you had missed that opportunity in 2020, then you missed something very significant. Yields on euro bonds were off the roof. I could remember, a federal government euro bond maturing in 2021 had a yield of as high as 14%. Ridiculous. That means if I bought that bond in May 2020 and held it to maturity in February 2021, I would have made a return of 14%.
And this is in dollars.
Yes, in dollars. There's no, what's that thing called? No risk. It's a federal government bond. Federal government will definitely pay your bond. Will definitely give you your dollars. But 14% for something risk-free, interesting.
Yeah.
So I started asking myself that question. I'm sorry that I might say this, but how far is Russia going to be in Ukraine? Is that impact going to be that severe that we might see 2020 playing out again, where yields on African euro bonds just skyrocket? And trust me, I would say you need to monitor that, because once it skyrocket, please just buy.
So you are saying, when you are saying euro bonds, you are saying diversify away from naira. That's a general summary. Diversify away from naira and try to get a different currency in it. That's what I hear you saying. Okay.
And just put that a bit more into context. We also expect that dollars is going to strengthen, because when people start to see, so there's something we call flight to safety, risk of flight to safety. When people start to run to safety, to safe investment, one currency that comes to mind is, what is the best currency?
The US dollar.
And that's the US dollars. So a lot of people start buying US.
And that's
I mentioned something earlier, that inflation element is still there. So that means we might see a situation where interest rates might still go up. But when we think about it to see if this Ukraine and which, like I said, it's not really as bad as we think it was bad, because the country is being destroyed, but we're expecting, a lot of people have said about World War III, a lot of people have said about Europe is going to start, end different things in the last 1 week. But really, the beauty about it and why we're happy is America decided not to send their troops. That's the beautiful thing, because you can imagine if America had sent their troops, then maybe Europeans will say, okay, we want to support. But everybody says, we have support you, you can't deal with your stuff. So there might be an instance that, okay, that element of inflation, interest rates increasing in America might still be there. Because what people are already saying was, oh, if this becomes a global phenomenon, then it means that interest rates might not get higher again. So that means the rate at which we expect the Fed, the US Fed, to increase interest rates might probably not be as fast as it is again, because they will have to watch how the global, how the global economy plays out, how it affects the American market before they decide to say, okay, let's either increase a bit or not even increase at all. But for me, like I said, because we know that impact might not be as bad as we anticipated, then that inflation element might still be there. Interest rate might still go up. So the best thing for you to probably do is buy dollars and obviously invest it in America. But like I said, if what plays out in 2020 plays out again, then they cannot start looking at African yields getting higher because people are selling off. Obviously, we know that I can't speak about other African countries, but at least I know Nigeria will pay their bonds back. So basically, when those yields skyrocket, just go in and buy your euro.
I hear you. So then just allow, if you want to ask a question, you can send a DM or request to speak. Obianuju is the co-host. She can see your DMs and she can see you and add you. And at a point, she can ask me to allow you to speak, and I'll do that. So either you send me a DM or you send Obianuju a DM right there, or you just request to speak. She will add you and then we can take you. So Ahmed, I like to always summarize this for our listeners, right? Before there was a war in Ukraine, the US Federal Reserve was going to raise rates. And if the US Federal Reserve raised rates, that means if you have a dollar in a bank account in the US or anywhere that pays you a US rate of return, your dollars would earn more interest. Right now, dollars in America do not pay up to 1% if you put it in the bank. If you buy a bond, you don't get even 1%. But the US Fed is saying they're going to be very aggressive in raising rates, which means they might do, I heard about basis points, 25 basis points or 1 basis point increase in one meeting. That means that capital is going to flow to the dollar, not just because it's the safest currency, but because it's the only currency by major power that is paying above 1%, irrespective of inflation. So what that means is that if I simply held dollar, maybe in an account that pays me a return in dollar, I'm going to get, quote unquote, a risk-free rate on my dollar. I don't lose the 15% if I'm holding in Naira. Do I have it summarized right there?
Yes, accurate.
Okay, so we've established that I have to diversify into a different currency. What else can I do? What else can I do as a guy? I'm talking about a normal guy now. I have returns. I'm going to do dollars. What else can I do to take advantage and to also defend my assets from this inflation shock and the rise in the US dollar? What else can I do on the market?
Okay, so I like to say this. We need to start considering commodity. And I've been saying this in
Ahmed, you went up a bit. Ahmed, I think you're off a bit. I really can't hear you, but I hear you say commodity. So I know, if I may, before you come back in, when you say commodities, Nigeria, we have a lot of quote unquote commodities, but we don't have a commodity exchange per se. I know NGEX does allow Nigerians, it gives you that opportunity to invest in commodities. Now, I think I'm going to put that tweet up. You can basically buy paddy rice or cocoa or cashew via NGEX. Is that what I see you connecting back? I guess that's what you're speaking about. And I think that's a good way. That's a very, very good way for you to invest as well in a commodity from Nigeria. Cocoa is Nigeria's largest export, right? So you can invest in cocoa by not actually buying the cocoa beans. Ahmed, you're back online. I was just explaining your point about commodities, but you can go ahead. It's Twitter. Twitter will kick you off. You just have to log back in right away. Yeah, it's a Twitter thing.
So as I was saying, we need to start thinking about commodity. And interestingly, I mentioned this at the last time I was at the session with you. I talked about effects, and I think you're speaking about just now. We need to start thinking about commodities. And I'll give you a 2021 experience. Crude palm oil. We have only two companies in Nigeria that focus a lot on that commodity. And crude palm oil, last time I checked, did about 41%, between 40 and 50% return in price in 2021.
That's the palm oil. That palm oil. Is it that palm oil as a commodity, or is that like say Presco? How can I invest in this palm oil? Crude palm oil.
So, and we saw that increase in price reflects significantly in the revenues generated by both companies. The significant jump in revenue, significant jump in performance in 2021 was in those two companies were very alarmed. So we had to start digging at what is this performance? And we stumbled on good palm oil. And these guys are into good palm oil. So we checked the price of good palm oil. I was like, okay, that makes a lot of sense. Because these guys are definitely sellers of good palm oil. So as the prices continue to increase, they generate more revenue. It's just basic 1 plus 1 is equal to 2. And for me, it was a no-brainer when Presco came in September, thereabout, after that Q3 result, sometime in November, and said they wanted to pay an interim dividend because they obviously made a lot of money in 2021. Now, this is me just trying to tell you from a company perspective how a company that sells a commodity is benefiting from increases, which is driven by inflation, because inflation is increases in prices. And now we're talking about global inflation, which is increases in global commodities, in prices of global commodities. So it's just easy to see how that translates. Now, for me, I'm thinking just to the house to say, imagine if you were the one that actually bought $1 in January through a contract on maybe effects or on a commodity exchange. And at the end of the year, you sell that and you get your 50% return. You sell that contract and you get your 50% return. Basically, you are turning yourself, you are basically becoming a commodities trader, just the same way a Presco and a Okomo are commodity traders. But the only difference now is that they actually manufacture and produce it, but you are actually buying because you are expecting prices to continue to go higher.
Yeah.
And if you remember, one of the things that we kept this year, before the Russia and Ukraine was, this year we're going to see inflation, global inflation, prices of these commodities will continue to rise. So why don't you just buy these commodities? Hold them, when the prices go higher, you take your capital gains and you move on.
So
if you don't want to do that, then you can decide to say, you know what, okay, maybe because I really don't know about commodities, and all that. I know FX does a lot in terms of research and information about this thing. So if you go on their website, you see a lot of information about the data of research analysis and provide those information that you need to make an informed decision. And if you don't want to do that, you can decide to go or you can try to focus on commodity-related companies. So what I mean by commodity-related companies, for instance, we've said it several on this call, crude oil prices are rising. Why don't I buy a stepper? Like I said, 1 plus 1 is equal to 2. This guy sells crude oil. So if crude oil prices is going higher, this guy is going to sell his crude oil at the higher price. And obviously that translates to revenue to the organization. Or like I mentioned already, you can decide to buy Okomo and Presco. So for me, what I'm just trying to say is if you don't want to go directly, you can go indirectly.
Yeah.
Directly is go to the commodities exchange and look for contracts, pick the guys that you believe are going to go higher and invest. Or you go indirectly by looking for companies that deal a lot in commodities. And and just to also mention, there's also a transfer. Just remember that Transcorp also does, Transcorp also has a significant stake in an OML. Obviously, it's not yet got into a production level where they can sell off, but just thinking about the future, once they get to that production level, they can start selling. If crude oil prices continue to stay at high levels, close to $100, becomes beneficial to the company. So I'm not here to, like I said, I'm not here to speak about invest in this, invest in that, invest in this. I'm just saying, like I said, 1 plus 1 is equals to 2. Commodity prices are we expect global inflation to be the mainstay in 2022, which means that global commodity prices are going to go higher. Why don't you take advantage in that and give yourself a global exposure in commodities?
I think that's a good point. I'm looking at Presco, right? Presco 5-year return. That stock was about 70 naira or so, 2018. Crashed all the way to about 40 when we had the COVID. It's back up to about 103 naira. So just in terms of dividend yield, 2.88 or so dividend yield on that guy. PE 3.11, very, very good. That just tells you that it's not that expensive, right? If you put in, you get about your money back in about 3 years. It's looking okay. That's palm oil, right? And Okumo, like you said, both of those guys had wonderful results this year. And that's basically riding off the back of higher crude oil prices. Wonderful. I like that. I like the fact about the affects as well. Apex does a lot of commodities that are not quoted in the stock market, like the sesame seeds, the rice paddy, and all that. That's also another place to go to try to benchmark and to invest and to see if that return can be higher than inflation. So I like the two things you've said. I know I'm not recommending, and it's not an investment show. We're not recommending any investment here. We're just talking educationally about stocks and all that. So it's not an investment show. You don't buy based on what you hear on the show. I gotta put that disclaimer in. So, Ahmed, I'm still squeezing you for more information, right? I've got out of you the dollar. I've got out of you commodities, right? I'm not sure there's any other thing you can tell me where I can invest my money in Nigeria. Can I go offshore and buy equities? I'm a big equities US guy. Because I looked at the returns, right, for the last 5 years of all the asset classes in the world. 5 years. I go to a site called Capital Speculator. The number one asset in terms of return for the last 5 years has been US equities, measured by the VTI. VTI is just an ETF that tracks the S&P. So if you had bought US stocks, the index of US stocks, you would have made the most return as an asset class over the last 5 years. The second asset class was real estate in the US. So again, I'm tracking the VNQ, which is an ETF that tracks real estate investments in America. So American stocks, American real estate, over a 5-year period, have actually beaten emerging markets like Nigeria, South Africa, Ghana in terms of returns. Because, of course, American stocks have got this tech-heavy part of them, the Googles, the Amazon, that are creating significant wealth. How is real estate also something I should look for in this high inflation environment? Can I play just Nigeria real estate, or should I, like I said, expand my horizons to go abroad to the US and invest via ETFs that I can do from Nigeria on my phone and all that? What's your take on that? Ahmed, I've got you.
Sorry, I was on mute.
No worries.
So if you're investing in equities, I would always tell you to have a long-term view. Reason being that because based on empirical study, equities, which is like what you mentioned, equities tend to outperform inflation over a very long term. Now that long term is quite debatable. People tell long term is after 5 years, or people tell long term is 3 long term. But let's be very fair to ourselves. Anything above 7 years should be convenient to be called a long term. So is it a good time for you to get into American equity? So another thing again we need to consider is timing.
Timing.
Entry.
I like that. Timing.
When are we going in? Now, for me, would it be a good time to go in? I would say it's a bit shaky. Why? Because, like I said, right now, global investors have turned off their risk switch, meaning that people don't want to really take risk. So aside from the Russian Ukraine issue, there's also the inflation and the fact that interest rates are going to go up. And based on, I don't want to go academic, but based on academics, I'll still go academic. But based on academics, we all know that there's an inverse relationship between interest rates and the value of asset. So if inflation starts to rise, we should expect that investors are going to price that in. The big guys are going to price that in, that go out of equity. So will it be a good time to come in? I would say yes, and I also say no, because if you go in now, there's still the tendency that prices might get lower leading to the end of the year, and it's good. Like I said, I have a long-term time horizon. So what is your risk appetite? That's also another thing you need to factor. Say, okay, if I go in now and the prices of American equities drop by 15-20%, will I start to panic? Or will I start to cry? Or will I start to have risk sleepless time? If the answer to that is yes, then why go in? Because there's still a tendency that it might go further down. Even on my technical analysis, looking at the S&P 500, it still seems like this is just like a minor pullback. There might still be another significant shift. It's still a bit shaky. Everything comes out now, the market is going to roll over. So if you are comfortable with that, you say, okay, I can be there, even if I need 20%, I can still have beautiful nights and sleep well and have good dream. Then why? You can go in. But if you are not, then I think I will tell you to be patient. Be patient enough. Be patient for a while. When things stabilize, because even if you look at how the market is a bit volatile now. So if you take a bit, chill a bit, and see how things play out in the next few months, when things start to stabilize. Like I always tell people, when a point after a volatile period comes when you see the true trend. So if after this volatility, the market starts to go down, when after prices come to the particular level, I think I can comfortably now go in because prices are now cheaper. And as we all see, after a while, prices things will stabilize and prices start trending upwards again. But if that's not the case, then I think I would say, for me, that's the way I say it. So you need to judge your time horizon. You need to look at your risk tolerance. You need to ask yourself, is it a good time to come in? Markets are still a little bit volatile. Should I stay chill a bit and see how things play out outside this volatility period? Then after the volatility period, I can now decide, should I come in at this time? Or, so you still have clarity. So it's like you saying, when you throw a stone into a river, you see all the what's that thing called? All the waves and all that before everything else stabilizes. Now gives you true clarity on how to look at it. So for me, I think that's what I would say in terms of ethics. So yes, you can invest in equities, but you just have to be a bit careful at this point.
Gotcha. So I think we have a question. Obiano, did you have someone else who wants to ask a question?
Yes, hello. We have someone, I think he has dropped off. It was Ben Hoyt. He wanted to ask the question and make a comment.
Gotcha.
I think he has dropped.
I have a DM. I have a DM for Ahmed. Ahmed, somebody's asking you like that between Okumo and Presco. He's just asking he doesn't just an opinion that between Okumo and Presco, which should he look at? Can you answer that on air? He's asking. Ahmed. I can hear you, yes. So it's asking.
Okay, I lost you guys for a bit.
Yeah. So I'm a guy on DM asking me that between Presco and Okumo, they both do palm oil. He's asking which, in your view, do you think offers? He wants to just invest in that sector. He's a long-term guy. That's what he's saying. That, but which should
buy both?
He should buy both. Just split it and buy both.
Yes.
Okay. Okay.
At least diversify your non-systematic risk.
Yeah, I hear you. So, I mean, let me ask you a question about the US markets, right? I buy Nigerian stocks. Yeah, I buy it via the Nigerian ETF. So, there's this Global X. I think the ticker is the NGE. The NGE is the ticker. I buy Nigerian stocks through there. They buy MTN, Access Bank, Guarantee Trust, Nestle. They buy Nigerian stocks. I find out that the guys here, it's the volatility when I buy from the US market seems less than when it's in the Nigerian market. I don't know if I can explain what's going on. When I buy it via an ETF in the US, I get lower volatility on that ETF than if I bought the Nigerian actual component directly. Do you have any insight to that?
So, how will I explain this to you now? If I start to break it down, I have to go a bit academic.
Yeah.
So it all depends on the creation methodology of the ETF.
Mm-hmm.
Now, every ETF has constituent, and the real value of, so just think about it. Let me make it very, very basic, yeah, so that everybody can understand what I'm trying to say. So imagine you have, yes, this is what I say in class, balanced diet. So if you talk about balanced diet, from what we were taught growing up, at least in my own economy, when I was in secondary school, balanced diet means you have a piece of everything on your plate. Now, the value of that plate is all dependent on all the different types of food that you have on that. So if one of them is volatile and one of them, and that one that is volatile in terms of pricing is not that significant in the makeup of that plate, it doesn't affect the value of the plate. Does that, am I making sense?
I understand. I get what you're doing, yeah.
Exactly. So the ETF in itself has constituents, and the constituents might be volatile, but because they might not have a significant contribution to the whole basket, they might not affect or lead to a volatility in the basket. So let me explain. Are you aware that 15%, or rather the top 15 most capitalized stocks on the Nigerian Stock Exchange represent about 89%, thereabout? The last time I checked.
Say that again. The top 15 stocks. Yeah.
The top 15 most capitalized stocks on the Nigerian Stock Exchange represent about 83 to 85 or 87 thereabout. I'm sorry, I can't get my figures right at the moment, but that they represent about 80-something% of the total value of the Nigerian oil trade.
That is.
So what that means is if those 15 stocks move, the oil share index is going to move.
That is.
Now, I can break it further down to tell you that the top 5 stocks, about 60-something, they're about 60-something% of the oil share index. So if MTN, Grand Cement, Dangote Cement, Intel, and I've forgotten the last person, Nestle, if they decide to move, the oil share index is going to move.
Gotcha. I got that. So I mean that's a concentration, but I can also argue with you that the U.S. markets with the FANG also have that concentration. As a matter of fact, if you take away Facebook, Amazon, Alphabet, Netflix, and the rest, the U.S. market is really a flat market, right? The growth has actually come from that concentration of the FANG stocks in the U.S. as well. So we're saying that the outlier stocks are basically pulling the entire market. Is that what we're saying now?
Yes.
Okay, that's fair enough. That's fair enough. So I have a guy also asking me on DM now that if he had $1,000, that if you had $1,000, for instance, that would it make sense to just basically invest in the US markets or diversify, or he wants to see should he concentrate or should he diversify? He's basically saying, I want to get growth. And even if I invest in Nigerian markets and I get a higher return, if I convert back to dollar, it's going to fall in terms of inflation. Is that a right way to look at investing in the Nigerian market? If I make 25% and it beats inflation, right? Should I still convert it to the dollar? Or should I just say if I invest in Naira and it beats Naira inflation, I am good? So should I convert my Naira returns to dollar to show it has made a return? Or should I only just worry about inflation?
So if I give a response, a lot of people are going to stone me wherever they are across the world or across Nigeria. But to be honest, why do you want to compare? So let me, and I say this to a lot of my clients, that why do we bother ourselves with dollar if we don't have anything tied to dollar in terms of liability? So I receive my money in Naira, I spend my money in Naira. I'm not going to America anytime soon. I don't have liabilities, I'm not paying for school fees, I'm not sending my children abroad. Why do we bother ourselves with dollars? So I think that narrative of our Naira is losing value and all that, I think it's becoming overflow.
So if I was a devil's advocate, right? If I was a devil and I say that I want to price it in dollars because I import in dollars. So if my daughter goes to a school in Ikeja, I buy local food, but I'm paying for my recharge card, or I have a course I'm doing online, and I have to take dollars to pay for that course online. So I have to then convert my returns to dollars.
Thank you very much. Now you have a dollar lab.
Okay.
But a lot of us don't have dollar liability. A lot of us don't have anything to do with dollars. But we still want to hold dollars because people are saying that Naira is losing value. For me, I think what we should be concerned about is our real return, which is, do I have safe investments that can give me returns higher than inflation? Because the moment I start to invest in those securities, then it means that I am losing value in my money, because my money is not growing faster than the prices of goods in Nigeria. So for me, for us, if we're Nigerians and we don't have dollar liability, I think we should first be bothered about that inflation of 15.86. I think it's 15.86%.
Yeah.
Last time I checked. So I think we should be bothered about that than saying, devaluation of money, and all that, devaluation of Naira, dollars is going to go up. So if you do that, then you are not really. So if you earn your income in Naira and you change it to dollars, not because you have a liability, then what you are basically doing is you are investing in dollars. Because now, dollar is now an asset to you, not necessarily the fact that you are trying to urge against devaluation of Naira. So what you have done is you've turned dollar, just the same way we buy Bitcoin, you've turned dollar to an asset. Now, the only way you can make money from that asset is if the So if dollar is almost from 420 to 500 in the next 1 year. So what you have just technically done is that you have just changed your naira to dollar for no reason. Now, you now bother yourself, which is what I hear the young gentleman saying. You now bother yourself with something very significant. I now have dollars. What do I do with it? So if you take that dollar and now buy a security, a stock, and the stock price drops by 50%, you have lost your dollar, you have lost your naira, you have lost everything. So, which is what I tell people, we bother. I'm not an advocate for, like I said, I'm not advocating that we shouldn't get dollars. Like I said, the Lord will stone me with my response. But that's the
I think, Ahmed, I think you made that point. I think so. The answer to his question is this: is that when you are investing in naira, you want to invest to worry about the local inflation rate first before you worry about the dollar conversion rate. That's what I hear you saying. I believe that's what you are saying. If that it is, that's true. So I think he has heard you. He's telling me he has heard you. So if I invest in Nigeria, my hurdle rate is the inflation rate, not the exchange conversion rate back to the dollar. That's what Ahmed is saying. Ahmed, I see you trying to get back in. If you are in, I have a second question for you. If you're back in. There's an echo somewhere. I'm not sure where it's coming from. Ahmed, can you hear me now?
I can hear you. Can you hear me?
Yes, I can. So I just... There's an echo somewhere.
I hope the echo is not from me because I don't know if I'm battling with Twitter or I'm battling with my network. I'm certainly battling with something.
When you speak, it's good. But I think when I speak, that's when I have the echo. But there's no echo now, so it looks like we're back on. So Ahmed,
I think I've checked to rectify.
Okay, great. He says he's fine. He has heard you. Super cool. Someone is asking me about the CBN wants to raise 200 billion in foreign reserves. 200 billion. They are not going to fund the banks, they said, going forward. So they're going to conserve all the oil and gas revenues that they get, and it's going to go to their foreign reserves, because the foreign reserves are owned by the Central Bank of Nigeria. And that banks and the BDCs will now be asked to go and fend for themselves, i.e. go and raise your own dollar. Simple question. Will this mean there's going to be a devaluation of the naira? Simple question. If the CBN stops funding dollars, will there be a devaluation of the Nigerian currency?
So I see it differently. I like the initiative. I believe it's an impressive one. But is it overzealous? My answer to that is yes. Yes, is it overzealous? My answer to that is yes. So what are they trying to do? So someone has created an initiative. I remember when was it last year that the central bank gave an initiative of around repatriations, and you get
was it 5 naira or so? Yeah.
So today we made the feedback from CBN was that it was a success. It was a successful program, successful initiative. They were getting almost $100 million every week. Was it $10 million or $100 million every week? I think it's $10 million. They were getting $10 million every week and all that, and it was a successful program. So they want to replicate it to the non-oil sector. And that's what brought out that's what I was reading just now about this before we started the spaces. So what they're intending to do now is they now taken an initiative to say if you are a non-oil exporter, more focused around agriculture and all that, yeah. locally produced for export still. If you repatriate your proceeds from your sale, you would get a $65 per dollar incentive. So the expectation for that is that that would also bring in a lot of, and they also give you facility. So there's also a facility to it. So if you get the facility, and you process, obviously that's automatic. That means that point has to come back to you.
Okay, I think you dropped off again, right?
Yes.
So, Obi, do you have a question for us?
Yeah, so I was going to ask a question around hedging the funds, your funds against dollar inflation. But I think more or less, Hamid has answered that, which is that you should, of course, not just keep your dollars, but also invest it put it in some instruments so that it will help to yield something that will, of course, protect you from inflation. But the other question I was going to ask him is how are real estate investments different from real estate ETFs? I don't know if it's back. Let me just check. Yeah, it's coming back. So,
I'm just gonna. I can answer that while it's to log back in. I think the real estate investment trusts are like a trust, like a unit trust scheme where you pull together funds and hand over to a manager, and the manager then invests in properties, right? So the ETF is just an exchange traded fund. The difference between ETFs and units or mutual funds is that the ETFs can be traded during the day. So it's an exchange tradable fund. The mutual funds, more or less, they are traded at the end of the day. So they are not exchange tradable. They are every day they have a closing price and they have like a net asset value. That's just the core difference between ETFs and mutual and unit trust. They both do, and they are almost similar, but exchange traded funds are more flexible. So you can buy and sell them like you would buy and sell a stock that you have during the day. Correct?
Okay.
I've got Ahmed. Yeah, Ahmed wants to speak.
I think before Ahmed speaks, we should take somebody. I think somebody wants to ask a question.
Sure, go for it.
I've just can you unmute to speak?
Yes, I think the very good topic you are choosing, and I think for you too, you are telling me. I think the poorer countries are very, very affected due to this early rate of the crude oil or something gases, LNG gas or many things. You know very well about that. Russia is the biggest producer of the gas, and all the gas is provided to European Union countries. After some time, I think they sit on a dialogue table and they again get from the resources from Russian people. This is not a way they have no any choice. If they have any choice, the rate are high. The Russia is providing the same gas in very cheap price, and if they get from other countries, the rate is become very high. And the poor countries like Pakistan, Afghanistan, and many other people, you know very well that crude oil, they are purchasing crude oil in a rent, like a rent. They're not paying cash on these products. The same thing when they affected in other countries, they also affect the poor countries also. In our country, I'm talking my country. Recently, the crude oil or petroleum prices are very high, and day by day they are increasing because the dollar of one barrel of oil is I think $100. 1 barrel of oil, crude oil, becomes $100, and soon 3 months before it is I think 70 or 65. The difference between day by day it is increasing because the countries are not going to have minerals like they have no opportunity of these crude oils or gases, and many other countries also no have choice.
I think
Thank you very much, Abdul.
I think if I got this, I think if I got this question, Uju, I think Obian Uju, I think he's saying that oil and gas prices are going higher because the price is going higher, obviously, right? And because other countries have no, should we say, options or no alternatives to crude oil. So this is basically affecting the budgets of other countries. I think he's correct. That is true. The problem with oil price, I think the Dr. made a very, very good submission, is that the United States is a very, very big crude oil buyer, and they're also a very, very big crude oil exporter. But right now they are going green and renewable. So that means that if you take away crude oil, or Obi, if you take, yeah, Obi, can you hear me? I think you have to mute it. So
Yes, I can.
okay, super. So I was just talking about Ahmed's contribution. We was talking about crude oil prices going higher. As long as we stay green, as long as the West wants to stay green, that is output taken away from the market. And if you take away output from the market, the prices are going to go up. So we're a long way away from a green world. For now, we're a fossil fuel driven world. And until the world can create a fuel that can power trucks and ships and can warm homes without burning carbon, I think oil prices are going to keep on going up. OPEC is a cartel, and Russia is a member of OPEC Plus. OPEC Plus. So it's in their best interest to keep oil prices high because then they make more money. So to be very, very cynical, the war helps Russia even keep oil prices higher. So by fighting the war, Russia is actually having a benefit of keeping oil prices higher, which fund the war that they are fighting. So it's an unfortunate situation. So Obi, do you have someone else that wants to ask a question before I get back to Ahmed?
No, we
You're
don't,
good?
and we don't have any other question. The other person dropped. So guys, you can drop me a DM, or if you want to speak, just request to make your contributions or to make any comments.
But also, I think this is a big opportunity for Gulf countries because Gulf countries producing oil or something else, and they're taking the advantage of this war. And this is the first time they are taking the advantage of this thing. I think they're thinking the war is ongoing on and the prices becomes high and high and they become rich.
Because there's no substitute. I mean, right now, I heard Qatar was asked to supply Europe with gas. There's just no substitute to Russian gas. Qatar can only take gas to the Europe via ships, right? Only via ships, so LNG, which means the price is going to be much higher than Russia that is sending gas through pipelines. So really, Russia has got all the cards. I'm sorry to say, they have all the cards. They are pumping gas. It's a cold winter. Yeah, it's a cold winter, so you need Russian gas, and that's the problem.
Yes.
Okay, so Ahmed, are you back, Ahmed?
Please.
Ahmed, can I have you on? Oh, great. Ahmed, so someone sent me a DM, right? Of he bought gas in the UK, so he sent me a DM of his bill. And he bought gas, I think, last week for £1.47. He bought gas yesterday for £1.51. So that shows you that in the UK, gas prices are already going up. This is going to be inflation in the UK. So if my finance head is screwed on correctly, when prices start to go up, then the central bank of that nation has got to increase interest rates to starve inflation. So this is actually going to add more fire to this inflation problem. You can't have negative yields. You can't have negative yields if oil prices are going up and interest rates are going to go up. So there's going to be something that has to happen. The negative yields in Europe, I don't see them continuing. The yields in Nigeria that are so high may have to maybe come down a bit because there's just too much risk premium. So it's going to be a big issue how Europe can change its internal economics to fund expensive gas. That's just what I'm seeing, that rates are going to go up globally. And I don't want to use the R word, the recession word, but this might actually start to tip the world coming out of COVID with a supply chain issue. This might just be what tips the world into a recession. If the world slows down now and we have already spent money on COVID, what will the central banks then do again to get the world out of recession? Will they spend more and then cause the inflation to even balloon more? So this is what I see. I see a problem.
That's what I was trying to explain earlier, to say that, when you start to think about it, you start to ask, is this not, this is time for us to call the PhDs and the professors, to come and help us, dissect this, because, inflation is going higher, energy prices is going to skyrocket, which is going to get higher. And like you said, I'm looking at a recession. I don't want to start speaking with professing that, but if the world goes into a recession, then you start thinking the only way out of a recession is to do quantitative easing and all that. And remember that we are already, trying to battle inflation. Then you start to ask yourself, quantitative easing when inflation is high, when, and all that. So, you just have to, and another thing to understand about inflation again is there's a demand push and there's a cost push. And I think for us, the global inflation right now, for me, is moving away from a demand push to a cost pull. Yeah, because the cost of everything is just rising, and which is driven by the rising cost of energy, and the fact that global supply disruption is happening. The war in, I can remember, what's his name? The guy that spoke earlier, what's his name again? I'm sorry, but the name just ran out of my head. Dolapo, yes, thank you very much. Dolapo mentioned earlier about the Black Canal and how the Russian guys are blocked. So when you start thinking about all this, it just comes to the fact that there might be global. If this Russia and Ukraine goes and drags beyond what it is, then we might probably start seeing, cost push inflation. So what's going to happen is what we've been saying before was demand push, or rather demand pull inflation. Now we might be tending towards a cost push inflation, which would further, drive the inflation, to drive or reinforce and drive that inflation higher. So you have to be a bit careful how to resolve that, because if the central banks don't implement the right policies, then we might end up getting into a recession.
Okay.
So like I said, I don't want to start talking about, like you mentioned, I don't want to start talking about the R. Let's just step on through that we don't get to that level.
Okay.
Okay. Thank you, Ahmed. I think we have two people who want to speak. Okay, you have the floor. Please unmute yourself and speak. You have 1 minute.
Yeah, good evening, everybody, and Mr. Carlo, thank you for this speech. My question actually is for the energy guy. How I wish he's still around, but I hope you guys will help me do some justice to it. It's on the fuel increment. I'm looking at the aviation fuel specifically, because I understand that the total overhead cost in aviation is the fuel, and which constitutes about 40% of the overhead. And again, this same fuel is deregulated. So my thinking is, how could it be that this sector has been deregulated, unlike our normal PMS that is for long, do not have any investment because of course, the regulation all around it in the country. It does not attract any investment, nor anybody wants to. So that space is enough for players to get in and set up either medulla or whatever They shouldn't be having that problem. But look at the cost of flight now has doubled the size because of that. So I am in my head, I'm like calculating that is what is really the problem that sector too cannot have investment as it were in the other sector that we have. Thank you.
Yeah, thanks. It's that question. So you are asking A1 fuel is deregulated like diesel, but PMS is not deregulated. Just to be clear, are you asking why it's not, or because the PIB now has been passed? And I think if you know you're in Nigeria, you understand that PMS pricing is quote unquote political now. If you deregulate PMS prices, the prices are going to go up. And I think that's why they pended the PIB implementation because they do not want prices to go up in an election year. So they understand that the prices have to go up in a deregulation, but they do not want to do it now because they think they would lose votes. That's what's going on. So I think it is also if 2023 elections are over, probably the government then would implement the PIB, which would then mean prices will go up or will be driven by market forces. So if crude oil falls, then the price of A1, PMS, and diesel will fall. It will not be a centrally fixed market. That's my answer.
Well, thank you, Mr. Carlo. I didn't get it properly, please. Because if the aviation fuel is not regulated for some time right now, so I wonder why is it that it does not attract the refineries to refine exclusively that sector oil?
I think it's maybe the economy. I get your question. I think it's maybe the economics of how refineries are set up. I know there's a diesel refinery in Delta that refines only diesel because diesel is not regulated. So the Niger Delta refinery refines only diesel because diesel prices are fixed by market forces and not by the government. I don't know how many planes we have in Nigeria that would necessitate an capital investment in just A1. So you also have to ask, is there going to be a market for that? I mean, how many planes do we really have here? How many planes land I would buy the fuel here? I don't know the figures, but I think the market is really in PMS. So any refinery will want to do PMS and then use the rest to sell off or to maybe keep its product base to subsidize one with the other. So I'm not sure if I was a board director, approve a refinery that was going to cost me millions and billions just for aviation fuel. That's basically where I'm coming from. I would prefer a full refinery where
Yeah, that makes a lot of sense. I actually agree. Because the risk is too high to actually back on such a project without a clear market on it. Thank you very much, Mr. Kali.
You're very welcome.
Okay. Thank you, Antong. If I give the floor now, I'll take your question.
Thank you very much. I just came into this space. I've been listening over time. And I think that looking at what the last speaker said as regards the issue of the aviation fuel and the price of crude going up, things, some of these factors we argue here are better addressed by professionals. And it's so unfortunate that the so-called professionals, they are not doing their bit. Will I say as a result of maybe inconsistency of policy, or most of them are scared to speak truth to power. As a matter of fact, some of us are people who fly by air most time. And I could tell you of recent that there is drop of passengers. For instance, Lagos Abuja just in equivalent is $100. And going back, you're spending $200 on a flight that is less than 50 minutes. It doesn't work. I believe we should look inward. Maybe setting up a refinery, but like Dr. Carlos said earlier, that most people don't see it as a profitable venture of setting up the aviation fuel, maybe a modular refinery to crash the price. But these are some things we could look inward because if at all we have an aviation fuel modular refinery, I believe we could market it to other African countries. That would be a good initiative because I learned that 40% of what the aviation sector makes goes back to the regulatory bodies, which most time most of the airlines are complaining of high cost of tax and regulation from the government. That is not helping the business. So there are lots of issues. And we believe that we're supposed to have on this conversation, at least some of the people who are in the industry have to be here to make contributions and tell us the way forward. Because we don't think we could continue like this with a very high fare, skyrocketing to the price of maybe transportation locally. So it's a problem. So we need a solution. I believe we could do better than this.
Yeah, good point, Ifeanyi. So overall, yeah, the price of any item is determined by the supply and the demand. Airline prices are going up really because their costs of inputs have also gone up. That's what they will argue. And if you look at how they increase the prices across board, it looks like they're also forming a cartel. They all are sort of agree to themselves that they are going to increase prices. And that's essentially what they did. But if there was competition, right? If you had low-cost carriers, perhaps, for instance, that had smaller city-to-city planes, like had the prop planes and all that, that would help a bit, right? That would be a bit more, you could fly from Lagos to where you are going in Jos and all that. And then we have those larger planes taking you from, say, Lagos to Abuja in one go. So it's many things. Number one, competition. Number two, the cost of gas, aviation fuel, unfortunately, has gone up. Why has it gone up is a different topic to talk about. There are no refineries in Nigeria. Why are there no refineries in Nigeria? You know what the answer is going to be. So if we have no refineries in Nigeria and we are importing the A1, right, then of course we are going to be paying a dollar price because it's imported. If it was locally refined, then we would have paid a naira price, which would not be tagged to dollar and would not go up. So unfortunately, once the dollar exchange rate goes up and down, anything that is imported, then it's going to go up in price. I agree with you. It's expensive to fly 45 minutes, 55 minutes and pay $100. I agree with you for a nation like Nigeria, but we have no trains. Maybe the roads are not as good, so there's no alternative perhaps. If you could take a train at night and land in Abuja the next day via train, that would reduce the amount of demand for airline fares, which would then maybe cause them to bring down the prices. But hey, what can I say? That's just where we are right now. So I think I have a comeback to that. Yeah, it's fine.
I want to make a little conclusion. When you said there is no competition, the issue of saying there is no competition, I don't really think that there are some airlines who are willing to compete, but I think, like you said, there are cartels who is ready to frustrate you out of business. Because of recent, I have friends across the aviation sector. I begin to ask questions and have a feel of how this operates. And recently, I discovered something in the aviation sector that most people might not know. Apart from air pitch that stands out and few southerners, the aviation sector is dominated by the northerners. And I ask questions why. Is it that these people have this money? How do they get this funding? Then how do they execute this money? And the only thing you see is that after some time, they follow those airlines. There's an airline coming up from now till April, May. It's Northwest Airline. The MD is announced it's from the north. He has lived in the US for some time, and when we were discussing, he told me that he's only flying within the northeast. But I started asking myself questions. Yes, maybe these people have access to funding or somebody is fronting them. They have no experience. So after running it, maybe because you want to make profits, And if you know how the aviation sector is run, most of these people bring in planes on lease, old planes, refurbish them and put them. When they make their money after some time, the company crashes. So there's a problem. Not really that like Green Africa, they are willing to compete, but how with the regulators in the industry, okay, allow you to decide your price, your margin. They won't allow you, they will frustrate you. And the likes of it's just unfortunate. The ones we see at the line with people, their services are poor. You take an airline Lagos to Abuja, not going by air. Sorry, I'm calling their name because I've been part of the mess. The flight was 10 a.m. You leave by 7, 8 at night, which is not supposed to be so. Or 1, 2, you leave by 10. At least I've had a flight by 1. Before we left Abuja to Lagos, it was after 10. And you see all these things happen.
No, I hear you. I completely get your sentiment, but I wanted to keep it just on the line of the economic side of it. I mean,
no, it's still part of the economy.
I hear you.
When you talk about trade, recently, I'm giving you my experience because when you don't have experience, you cannot have the perspective or larger view of how these things work. When you talk about a rail station going far distance, maybe being effective, that's another option. But there are a lot of trades. Recently, I left Lagos for Warri. So when I got to Warri, I had to book a flight to Abuja. I was told that we used to trade. But how safe is that? On Warri, get a train going to Itakwe, from Itakwe, you take a bus to Abuja. But there are still fears. So we have a long way. The economy we need professionals who are serious because every economy does not grow with short-term plan. We need a long-term, mid-term, and a short-term plan.
Well said, Ifeanyi, well said. And again, let me just say I agree with you. The point I'm making is that what you are seeing in terms of pricing is because of the infrastructure deficit. If I want to go from Atlanta to Washington, there are many ways to get there. So prices tend to stay moderated because if I increase my price on the airfares, there are other options for consumers. So choice helps to moderate and keep prices lower. This is the point I'm making. And because we haven't invested in choice, there are no railways, the roads are not excellent, then you're going to have that cartel taking up prices whenever they want. This is the point I'm making. Even in the airlines, it's 55 minutes. We should have an economy carrier. I don't want any food. I don't want any music. I just want to get on a plane and land in Abuja in 55 minutes. Why can't we have a low-cost carrier? Just go in there, pay your basic fare, you land, you go away. No frills like Ryanair. Perfect. 55 minutes flight, you get on a propeller plane, you land. That's what I'm talking about. If you bring a 737 that's going to consume fuel, you're going to pay parking fees, the costs are going to keep on going up and up and up. So we're going to get a bit more innovative and then bring the price down. So you become a low-cost competitor. That's just what I'm saying. So yeah, I appreciate you. I hear what you're saying, and we're on the same page. We're just trying to x-ray the differences. I think Ahmed is completely off, i.e. technically, so we can't get him on, but we've got about 5 minutes or so to go. Yeah, so.
Okay, he's actually on. He's among the listeners. So Mohammed,
yeah, as a listener, I don't know if he can speak. I've invited him to speak, but I'm not sure. Okay, I don't know if he can get invite to speak. Yeah. So I'm going to start to wind down. I'm going to start to wind down the spaces. We'll be here for about 2 hours. I just want to thank Dolapo. Again, did you have anyone else make a contribution? I have some DMs, but I think they're asking the same questions. Someone is asking. I try not to. So I see your question. This is Dende 47. Dende is asking. What stock should I invest in if I have 100,000? I see your question, right? But we try not to give investment advice online. So if you could ask the question, I mean, what we're trying to say here is broadly, right? And we've said diversify away from Naira. You can hold Naira, but we're saying put a bit of your currency, your investments in other currencies. Then Ahmed has gone deeper to say, listen, try and invest in commodities. So he has given you palm oil as a commodity that you can also invest in, right? So if you can invest in a commodity like palm oil and the rest, that's a way for you to then ride that commodities flow that is going up. We asked him about real estate. He's not here to come back. But overall, I said the US market and the US real estate have been very, very good places to invest monies in the last 5 years. So past performance is not a guarantee of future performance, but past performance is prologue. So if the prologue has been that US equities have been doing pretty well and that US real estate has done pretty well, it should at least be in our short list. If we should invest, it's going to be up to you talking to your financial advisor. So not only going to give you direct recommendations, but I'm just trying to point you in the way. Ahmed has also said that when you are investing in Naira and you do not have a dollar exposure, then you should really base your mind on just beating the local Naira inflation, right? And not really trying to beat the dollar. So if you have no dollar exposure, try to beat just the Nigerian market and not worry too much about beating the dollar exchange rate. That's essentially what I hear Ahmed saying. I have another DM here. If someone isn't based in Nigeria, is it best to close up shop and invest outside the country? Again, it's an option. I mean, the US markets are hot right now. If you can get access to invest across by buying securities, I would advise you do so. I'm not sure about closing shop and leaving, but I would advise that you always diversify and have a second line of investment that do give you access to earn a foreign currency. Just basic economic diversification is what I'm talking about. What does SWIFT mean? Someone is asking what SWIFT means. The technical term is look at SWIFT like Google for banks. So if you send money, SWIFT is basically how you advise that other bank, like Gmail. It's like Gmail. This is how you advise other banks that they have received a remittance from another country. So it makes when you send money, they'll ask you what's your SWIFT code. That SWIFT code identifies the bank. It's like an email, right? So if I send money to the bank, I simply use their SWIFT code. I don't have to remember their name, or it identifies bank by bank. So if you are taking off SWIFT, that basically means that it's hard for that bank to participate in international transfers, right? So that's what basically SWIFT does. It's the full meaning is I think the Society for Funds Transfers, something like that. But what it does is just like Gmail for banks. If you send money to the bank, then you can basically get in there, and it's basically how the bank knows that it has received correspondence. I'm just going through my DMs real quick just to make sure I haven't missed anyone out. Yeah. Did you have anything on your end? I think I'm good here. We've got about 2 minutes to go, and then we can shut down the spaces. Ifeanyi, Ahmed, Tong, Dolakbo, all that spoke. Thank you guys. Joe, anything on your end?
None from my end.
Excellent. All right, guys.
Yeah.
So it's just time for me to start to wind the spaces down. Thanks, guys, for listening. We do this every Saturday. We try to talk about topical issues. This was like an emergency to bring Dolakbo in to talk to us about energy. He couldn't really stay for more than 30 minutes, but he's really a good guy to have here. We'll try to get him back so that he can actually spend his time and to talk to us about energy and oil prices. Nigeria is really an energy exporter. So anytime energy prices get affected globally, it affects us. So it's always important for us to know how crude oil prices do affect the economy. And Dolakbo's final word was that it could have been an opportunity for Nigeria to earn a lot more revenues if we had invested in the past by building new wells and capping them during the marginal rounds. But right now, the prices are higher, but Nigeria is not able to take advantage because our output is much lower. I think right now we're doing about less on Nigeria's own assumptions. We're doing less by about 500,000 barrels per day. This is just on Nigeria's own assumptions, right? We should have been doing better, but not even hitting targets. So, Ahmed, if you want to say anything in closing, the mic is yours. Ahmed, if you want to come up mute and just say something in closing. I know we lost you for a bit.
Thank you very much, Kalu. Yes, I think Twitter wasn't nice with me today. It wasn't nice, but at least I tried as much as possible to pass. I hope I passed a lot of quality information. And I also thank you and thank the listeners for listening to me. And also thank you for also having me on board.
Thank you, sir. We appreciate you taking your time every Saturday to just come and talk to us about investing. We know it's a big deal for you, and we are appreciative that you are investing your time with us and the listeners. Thank you so much. All right, guys, it's exactly exactly 2 hours on the clock. Thank you guys for listening. I'll see you guys next week. I'm trying to get some guests in here to talk about some good topics. So just tune in. I'll let you guys know what it's all about. All right, take care of yourselves. Stay safe. Go enjoy your Saturday. Let's pray for all the innocent souls in Ukraine. People are getting bombed. We just send prayers to them and just for God to just protect those little children, women, men. People shouldn't die. I mean, this is something that can be sorted out over a conference. We shouldn't have a war over this. It's just unnecessary to kill people for this. Please, please, guys, we shouldn't have a war over this. So that's just to close. Just send a prayer to all those people over there. Uju, do you want to say anything before we close?
Yes, just that this is happening at this time, and like I said, just to send our prayers to them, and we really do hope that they put the politics, their ego aside, and resolve this.
Amen.
In the best time possible.
Amen. All right, guys. Thank you so much, guys. I'm going to end it now. The recording is going to be on Twitter for 30 days, but the full recording will be on the podcast. The way I see it, the title is on my Twitter bio. Also, we have the website www.kaluaja.org. All the past podcast episodes are there. All my blog articles are there. All my feeds are there. Also, where you can go in and do a financial health check, plug in your figures. It will tell you if you are saving too much. If you're not saving too much, you can do all that. Also get apps to invest. So it's all there. It's all free. Go out and understand your money and all that. All right, guys.
So before you go on finance, I would like to, there's a project I'm working on. Maybe I will chat to Craig.
Sure. Let's do that. I'm online. I'm still online. Let's do that. All right. Just send me a DM. We'll talk right now. I'll give you my phone number. Yeah. All right. All right. Super. Thanks, guys. Take care of yourselves. Love you all. Bye.
Have a good weekend.